And you're live.
Good morning. This is the meeting of the City of Annapolis Police and Fire Retirement Commission. It's starting at 9:03 a.m. We have a quorum present. With that, we will begin with a general session. And then as we review particular managers, we will go into executive session pursuant to the regulation that allows us, while discussing city finances, to do so. And with that, for an overview of our plan in the markets, I'll turn this over to Mr. Jones, our investment consultant.
Great. Good morning, everyone. Thanks, Joe.
Actually, Ian, before I have you begin, we have circulated the minutes of the July 2023 general session. Were there any comments, changes, additions to be made to those minutes? Hearing none, if someone could make a motion to accept those.
Make a motion to accept.
Second, someone?
I'll second.
Okay, those in favor, aye.
Aye.
And that easiest, if there's anyone with an opposition, please say aloud no. Not hearing any, the minutes of July 2023 are accepted. Now, let me go back to where I was starting before. And Ian, will you please provide us with that review of the investment market environment?
Sure. So we put together a preliminary report as of August 31st, and on the market environment page, we have a snapshot of how the markets have done in 2023 and then out as far as 5 years. And if focusing on the year-to-date performance, that's the 8 months ending August, we have had positive returns in both equities and fixed income. And that comes after a pretty tough year in 2022. We have rebounded nicely. We still are not back at the highs that we were at as the prior to the market drawdown in 2022, but we've had pretty robust returns. And you can see the S&P 500, which is reflective of big companies in the US, was up just under 19%. Mid and small cap stocks were in high single digit territory. And I would say mid and small cap stocks, one, have been impacted earlier in the year as a result of their exposure to regional banks. And the regional banks went through a tough period of time with the failure of Silicon Valley Bank, Signature Bank, First Republic. But also the mid and small cap indices don't have the leadership in the broader market, which are specifically what people are now referring to as the Magnificent Seven. These are growth-oriented companies with some sort of connection to artificial intelligence. And I'll show you a slide in just a minute. Those are the companies which have led and which have, from an attribution standpoint, been responsible for the bulk of the broad market performance. That is further reflected in the performance of growth versus value. And if you recall, going back to 2022, value was the place to be. And that is after an extended period of growth leadership leading up to 2022. But we've had a reversal. In 2023, it's once again growth that has led. And you can see the growth index through August 31 was up more than 32%. And value was up about 5.8, 5.9 roughly. The international markets were positive, but they trailed the large cap domestic market. The EFI index was up roughly 10.9, and the emerging markets were up roughly 4.5%. On the bond side, if you recall, 2022 was horrible for bonds because of the rising interest rate environment, and we had double-digit negative returns coming from the bond market. And in 2023, we are back in positive territory You can see investment grade US bonds were up about 1.4%. That's representative of the US aggregate index. And then really, I think the standout has been high yield bonds. They've been the place to be for a number of years. And you've had better than a 7% return in high yield bonds. Those are bonds that have a higher risk because they are bonds of lower quality companies, but you get compensated with a higher yield. Where those investments will disappoint is when you come into a weaker economic environment and companies have trouble servicing their debt, and you might have defaults. And so if the government is successful in trying to slow the economy down and potentially put the economy into recession, we will not see a strong performance coming from the credit or the high yield part of the market. But needless to say, for the year-to-date period, they've been very strong, up 7%. You can also see the bond market has a very attractive current yield or yield to worst. And the aggregate index is now yielding about 5%. And that is if you hold all the bonds in the index to the average maturity, you're going to get about a 5% yield. So that is considerably higher than where we were roughly 2 years ago, where you were at about 1.5% in terms of yield to worst. And you get an 8.4% yield to worst in the corporate high yield part of the market. So a little bit more detail. I ran the market returns through close of business yesterday, September 12th. And again, we'll focus on the year-to-date column. And let me go back up. In the month of September, we've given back a little bit of ground, but we're still holding pretty strong. The S&P is up 17.5%, a little bit lower than where we were at the end of August in mid and small cap stocks. Still have leadership coming from growth, but a little bit less, but over 30%. And what I like to show on this page is that narrow leadership. Whoops, let me look down at the bottom of the page. And I have 8 stocks because I included Tesla. And so I'm not calling them the Magnificent Seven, but just 8 magnificent stocks. And you can see the leadership in some of these names, like Facebook, up over 150%, NVIDIA, up over 207%. That's just for 8.5 months in 2023. Tesla, up 117%. And then, from the market low in March of 2020, March 23rd of 2020, when you look at these stocks and how they've rebounded, NVIDIA has had a 750% return. Apple is up 221%, and Tesla is up 823%. So if you don't own exposure to these names, you haven't participated as much on the upside. And we don't have any active large cap growth managers, but you've done really well in the growth side of the market. But if you haven't owned these names in their market weight, you have trailed the market because these names are really big in the market from a market cap standpoint, and a lot of managers just don't hold them in the same market weight as the index represents. I'm going to pause there, Joe, and see if there's any questions.
Hearing no questions on general market events, I think it's time to turn to our specific holdings and discussion of our managers. And so with that, I would ask for a motion to move into executive session.
Motion to go executive.
Second.
Anyone opposed? Those in favor? Otherwise are ayes, and
Aye.
Aye.
so with that, let us move this meeting into executive session.
Okay. So,
1 second, Madeline, are we in executive session at this point?
We're still live.
Yeah. Nikki, are you able to reach out to Madeline?
Let me try to call her.
Thank you.
and the toolbar that I'm looking at still says live.
Yeah, I think she will tell us when she's changed it.
She may have just stepped away for a second.
Certainly.